NASDAQ XE, X Energy Inc., betting on small reactors to power the AI era. Section 01, Executive Summary. X Energy Inc., NASDAQ XE, is a Rockville, Maryland-based developer of advanced small modular nuclear reactors, or SMRs, and proprietary nuclear fuel, best known for its XE100 high-temperature gas-cooled reactor and its TRISO-X fuel manufacturing business. Founded in 2009 by entrepreneur Dr. Cam Gaffarin, the company went public on the NASDAQ Global Select Market on April 24, 2026, pricing an upsized IPO at $23 per share and raising approximately $1.1 billion in net proceeds, one of the largest nuclear sector listings in U.S. history, and a deal anchored by existing strategic investors, Amazon and Citadel founder Ken Griffin. In plain terms, X Energy is trying to build a new kind of nuclear power plant, smaller, factory-built, and marketed as safer and faster to deploy than a traditional reactor, specifically to serve the surge in electricity demand coming from AI data centers and heavy industry. The company does not yet operate a single commercial reactor. Its current revenue comes almost entirely from U.S. Department of Energy cost-share funding and engineering services tied to its lead project with Dow Chemical in Seadrift, Texas, not from selling electricity. The stock's post-IPO trajectory has been volatile. Shares surged roughly 27% on their trading debut, rallied further to a post-IPO high near $37 in May 2026 as JP Morgan and other banks initiated bullish coverage, and have since fallen back to roughly $14 as of mid-July 2026, below the IPO price, amid a broader pullback in AI-linked nuclear stocks and growing investor focus on the company's widening cash losses. Key facts at a glance. Flagship product, XE100, an 80-megawatt electric, 200-megawatt thermal high-temperature gas-cooled small modular reactor. Fuel business, TRISO-X, proprietary TRISO nuclear fuel manufacturing, NRC licensed. Reactor order backlog, approximately 11.5 gigawatts, representing approximately 144 XE100 units, per company disclosure. Anchor customers, Dow and Seadrift, Texas, Amazon with 5+ gigawatts planned through 2039, and Centrica in the UK. Q1 2026 revenue and grant income, $43.4 million, up 109% year-over-year. Q1 2026 net loss, $166.2 million, heavily distorted by a non-cash warrant charge discussed in Section 11. Pro forma liquidity post-IPO, approximately $2.05 billion, no debt outstanding. This report is intended to give both professional and retail investors a clear-eyed, plain English view of X Energy's business, its Q1 2026 results as a newly public company, and the key risks and catalysts likely to drive the stock over the next 12 to 24 months. It is not a recommendation to buy, sell, or hold XE shares. Investment thesis. The core bull case for X Energy rests on a straightforward macro trend. Electricity demand in the United States is rising for the first time in nearly 2 decades, driven overwhelmingly by AI data centers, and utilities and large corporate energy buyers are increasingly willing to sign long-term power agreements with nuclear developers to lock in reliable, carbon-free baseload electricity. X Energy has positioned itself as one of a small handful of credible SMR developers with a real regulatory track record, a large disclosed order backlog, and a differentiated proprietary fuel business, TRISO-X, that could generate revenue even if a given competitor's reactor design ultimately wins a specific deployment. The core bear case is equally straightforward. X Energy has never built or operated a commercial reactor, generates almost no revenue independent of government grants and engineering service fees, is burning cash at an accelerating rate, and operates in a capital-intensive, multi-decade licensing and construction business where competitors, Oklo, NuScale, TerraPower, Kairos Power, are chasing the same handful of hyperscale and industrial customers. The September 1, 2026 lockup expiration, when a large tranche of pre-IPO shares becomes freely tradable, is a specific, dated technical risk that several sell-side analysts have flagged. Thesis in one sentence. X Energy is a well-capitalized, well-connected first-mover bet on advanced nuclear power for the AI-driven electricity boom, but it remains a pre-revenue, pre-construction permit company whose stock price today reflects a large amount of execution risk still to be resolved over the next several years. Section 03. Mission. X-Energy describes its mission as making advanced nuclear energy accessible, affordable, and essential to an energy-abundant future, positioning itself squarely at the intersection of two major investment themes: the AI-driven surge in electricity demand and renewed bipartisan U.S. policy support for nuclear power as a clean, reliable, baseload energy source. Corporate milestones. 2009. Company founded by Dr. Cam Ghaffarian and nuclear physicist Eben Mulder. January 2019. J. Clay Sell, former U.S. Deputy Secretary of Energy, appointed CEO. Ghaffarian becomes Executive Chairman. 2023. Begins work with Dow on a 4-unit XE100 project at Dow's Seadrift, Texas site, the Longmont Generating Station, supported by the DOE's Advanced Reactor Demonstration Program. October 2024. $500 million private funding round, led by Amazon and Citadel founder Ken Griffin. November 2025. Closes oversubscribed $700 million Series D financing round. January 2026. Announces 10-year graphite supply agreement with SGL Carbon. Initial 3-year award valued at over $100 million. February 2026. TRISO-X receives the first-ever NRC Category 2 license, enabling advanced fuel manufacturing at the TX1 and TX2 sites. March 2026. Signs MOU with IHI Corporation in Japan on XE100 supply chain. Signs letter of intent with Taiwan Energy to evaluate XE100 deployment in Pennsylvania and the PJM market. April 24, 2026. IPO prices at $23 per share, upsized. Begins trading on NASDAQ under ticker XE. Announces exploratory collaboration with LG&E and KU, PPL Corporation subsidiaries in Kentucky. May 2026. Receives NRC Part 70 fuel fabrication license, enabling commercial TRISO-X manufacturing. NRC completes environmental assessment with a finding of no significant impact for the Dow Seadrift project. June 4, 2026. Reports first-ever quarterly results as a public company, covering Q1 2026. 2026 ongoing. Submits application to the UK's Generic Design Assessment process for the XE100. Section 04. Business model. X-Energy generates revenue today from two main sources, and neither is selling electricity yet. First, engineering and licensing services performed for customers and cost shared with the DOE under the Advanced Reactor Demonstration Program. Essentially, the government and X-Energy's customers are jointly funding the design, engineering, and regulatory approval work needed to build the first XE100 plants. Second, grant income directly from the ARDP program itself. Together, these made up substantially all of the company's $43.4 million of Q1 2026 revenue and grant income. Longer term, X-Energy's business model has two distinct commercial legs that investors should think about separately. Reactor sales and deployment, XE100. X-Energy designs the reactor and manages project delivery but does not itself own and operate power plants the way a utility does. It earns revenue from designing, licensing, supplying components for, and supporting construction of XE100 units for utility, industrial, and hyperscale data center customers. Fuel manufacturing, TRISO-X. This is arguably the more differentiated part of the business. TRISO-X is one of the only NRC-licensed commercial producers of TRISO fuel, a specialized, highly robust fuel form, used not just by the XE100 but potentially by other advanced reactor designs. If TRISO-X can become a merchant fuel supplier to the broader advanced reactor industry, not just to X-Energy's own reactors, it could generate a recurring revenue stream that is less dependent on X-Energy winning every individual reactor contract. Put simply, X-Energy is currently in the build the factory and get the permits phase, not the sell the product phase. Nearly all of its current cash intake and revenue is tied to development funding, not commercial power sales, which is normal for a first-of-a-kind nuclear technology company at this stage, but means the business model is unproven at commercial scale. Section 05, Products and Services. XE100 Reactor. The XE100 is an 80-megawatt electric high-temperature gas-cooled reactor that uses helium as a coolant and a pebble bed fuel design, rather than the water-cooled designs used by most conventional nuclear plants. Because the coolant is an inert gas rather than water, and the fuel pebbles are individually designed to contain radioactive material safely, even in an accident scenario. The reactor is marketed as having strong passive safety characteristics, meaning it is designed to shut itself down safely without needing human intervention or backup power, even in a worst-case scenario. Individual XE100 units are typically grouped into 4 reactor plants, generating a combined 320 megawatts electric, which the company says can be built in phases to match a customer's growing power needs. TRISO X fuel. TRISO, tri-structural isotropic, fuel particles are tiny uranium fuel kernels, individually coated in multiple protective ceramic layers, described by the nuclear industry as the most robust nuclear fuel on Earth, because each particle is designed to contain fission products even at very high temperatures. TRISO X, X Energy's fuel fabrication subsidiary, received the NRC's first-ever Category 2 fuel cycle license in February 2026, and a Part 70 commercial fuel fabrication license in May 2026, positioning it as an early mover in HALEU, high-assay low-enriched uranium, fuel manufacturing, the specific fuel type required by most next-generation reactor designs, not just X Energy's own. Manufacturing footprint. The TX-1 and TX-2 fuel fabrication facilities, co-located in the United States, form the core of TRISO X's production capacity. TX-1 construction is on schedule for completion in the first half of 2028, according to Q1 2026 management commentary. How to think about it. Picture the Z100 as the engine, and TRISO X as the specialized fuel that engine, and potentially other companies' engines, needs to run. X Energy is betting that owning both pieces, not just the reactor design, gives it a structural advantage even if it doesn't win every reactor order. Section 06. Industry Overview. For the first time in roughly 20 years, U.S. electricity demand is growing meaningfully, driven primarily by the build-out of AI data centers, which require enormous continuous baseload amounts of power, alongside broader electrification trends in manufacturing and transportation. Utilities and hyperscale technology companies, Amazon, Microsoft, Google, and Meta, have all signed nuclear-related agreements over the past 2 years, reflecting a view that traditional grid expansion and renewables plus storage alone cannot meet this demand fast enough or reliably enough. Small modular reactors have emerged as a favored solution because, in theory, they can be manufactured in factories rather than built entirely on-site, shortening construction timelines and reducing the massive cost overruns that have historically plagued large conventional nuclear projects, such as the Vogtle plant expansion in Georgia. Policy environment has also become more favorable. The Department of Energy's Advanced Reactor Demonstration Program provides direct cost-share funding to accelerate first-of-a-kind projects, and recent federal legislation, including the ADVANCE Act, has aimed to streamline NRC licensing for advanced reactor designs. That said, the industry remains pre-commercial in the United States as of this report's publication. No company in the U.S. SMR sector, including X Energy, Oklo, NuScale, TerraPower, or Kairos Power, has completed construction and begun commercial operation of a next-generation SMR. The entire investment thesis for the sector rests on execution against multi-year construction and licensing timelines that have historically proven difficult to hit in the nuclear industry. Section 07 Market Opportunity. X Energy has disclosed an order backlog described as more than 11 gigawatts, representing approximately 144 Z100 reactor units across its announced customer relationships, a figure that spans a mix of definitive agreements, letters of intent, and exploratory collaborations at varying stages of maturity. Investors should note that a backlog in this industry is materially different from a backlog in most other sectors. It reflects long-term development intent, not signed fully financed construction contracts with committed delivery dates. Customer summary. Dow, the most advanced project, DOE ARDP supported, a 4-unit Z100 project, the Long Mott Generating Station at Dow's Seadrift, Texas site, NRC environmental assessment complete with a finding of no significant impact, construction permit targeted for Q1 2027, Amazon, definitive framework, plans for more than 5 gigawatts of Z100 projects across the U.S. through 2039, Centrica, definitive framework for the UK, underpinning X Energy's UK generic design assessment submission. LG&E and KU PPL Corporation subsidiaries, exploratory collaboration, evaluating XE100 deployment in Kentucky, announced April 2026. Talon Energy, letter of intent, evaluating 3 or more 4-unit XE100 plants, approximately 1 gigawatt, in Pennsylvania and across the PJM market. Beyond reactor sales, TRISO X's addressable market is potentially broader than X Energy's own reactor pipeline, since HALEU fuel is required by multiple competing next-generation reactor designs across the industry, meaning TRISO X could, in principle, sell fuel to some of X Energy's own reactor design competitors. Section 08. Competitive Landscape. Oklo Inc., NYSE OKLO, compact fast neutron aurora reactor ranging from 15 to over 100 megawatts electric. Partnerships with NVIDIA and Meta, targeting first plant by 2028, widely viewed by analysts as the most direct competitor. NuScale Power Corp., NYSE SMR, first and only SMR design certified by the NRC to date. Light water-cooled design, more conventional than X Energy's HTGR, commercial deployments not expected until around 2030. TerraPower, private Gates-backed, natrium-sodium-cooled fast reactor with integrated molten salt energy storage, building demonstration plant in Wyoming. Kairos Power, private, fluoride salt-cooled high-temperature reactor, has DOE ARDP support and a demonstration unit under construction in Tennessee. BWX Technologies, NYSE BWXT, established profitable nuclear component and naval reactor manufacturer, less of a pure-play SMR developer, more of a picks and shovels supplier to the whole industry. Where X Energy stands, Wall Street analysts have generally described X Energy as a front-runner among publicly traded SMR developers, citing its 11.5 gigawatt disclosed backlog, its Dow and Amazon relationships, and TRISO X's first-mover NRC licensing position in commercial HALEU fuel fabrication. However, Oklo has secured its own high-profile hyperscaler relationships with Meta and NVIDIA, and has generally traded at a premium valuation, while NuScale retains the distinction of being the only NRC design-certified SMR to date. No company in this peer group has yet demonstrated it can build and operate a reactor on time and on budget. Section 09. Management Team. Dr. Kam Ghaffarian, Founder and Executive Chairman. Founded X Energy in 2009. Ghaffarian is also co-founder and executive chairman of several other technology and space companies, including Axiom Space, Intuitive Machines, and Quantum Space, and has been recognized on Forbes' list of America's greatest innovators. His involvement across multiple ventures is a relevant consideration for investors evaluating management banking. Jay Claysell, Chief Executive Officer, CEO since January 2019, and a company director since July 2021. Previously served as U.S. Deputy Secretary of Energy from 2005 to 2008 under President George W. Bush, where he acted as Chief Operating Officer of the DOE and was a leading advocate for the administration's nuclear energy policy. Also held senior roles at Hunt Consolidated's renewable energy subsidiary and multiple positions in the U.S. Senate and White House earlier in his career. Holds a J.D. from the University of Texas School of Law and a BBA from Texas Tech University. His deep familiarity with DOE processes and federal energy policy is frequently cited by the company as a strategic advantage in navigating regulatory and grant funding relationships. Mark Mize, Senior Vice President and Chief Financial Officer, oversees X Energy's financial operations, including its transition from a privately funded development company to a reporting public company following the April 2026 IPO. Eben Mulder, Senior Vice President and Chief Scientist, co-founder of X Energy and a nuclear physicist, central to the original technical design of the XE100 and TRISO fuel platform. Broader leadership bench. The company's S-1A filing highlights a management and technical team drawn from organizations including Ontario Power Generation, GE Hitachi Nuclear Energy, the DOE, the Nuclear Regulatory Commission, Constellation Energy, BWX Technologies, Westinghouse, and the Emirates Nuclear Energy Corporation, a bench the company positions as evidence of deep, large-scale nuclear project delivery experience relative to some peers. Section 10. Financial Performance. X Energy has only reported 1 quarter of results as a public company. Q1 2026, reported June 4, 2026. So a multi-year historical public company track record does not yet exist. In simple terms, revenue more than doubled, which is a genuinely positive sign of scaling activity on the Dow and DOE program. But operating expenses grew even faster, and the company is still spending far more cash than it takes in, a normal pattern for a pre-commercial, capital-intensive technology company, but one that means X Energy remains entirely dependent on external capital rather than its own operations to fund growth for the foreseeable future. Capital raising history: October 2024, $500 million private funding round led by Amazon and Ken Griffin of Citadel. November 2025, $700 million oversubscribed Series D financing round. April 2026, initial public offering raising approximately $1.1 billion in net proceeds. This trajectory reflects a company that has consistently been able to attract large-scale institutional and strategic capital, which is itself a signal of investor confidence in the underlying technology and management team, even though the company has not yet demonstrated it can generate sustainable operating cash flow. Section 11. Detailed Analysis. Q1 2026 Earnings Report. Revenue. Total revenue and grant income was $43.4 million, up 109% from $21 million a year earlier. Of this, $39.9 million was services revenue tied primarily to the Dow and DOE ARDP program, and $3.5 million was direct DOE grant income. This is a real and meaningful growth number, but investors should understand it reflects increased government cost share and services activity, not sales of reactors or fuel to paying commercial customers at market prices. Gross margin and operating income. X Energy does not report a traditional gross margin line given its cost share and services revenue model. Total operating expenses were $109.5 million, including $65.4 million of direct project costs, up 133% year over year, producing an operating loss of $66.1 million. In simple terms, for every dollar of revenue and grant income the company brought in, it spent roughly $2.50 on operating costs, a ratio expected to persist while the company remains in the pre-commercial, design and licensing phase. Net income. Net loss was $166.2 million, sharply wider than the $10.2 million loss in Q1 2025. Importantly, most of this gap is a non-cash accounting item. The company recorded a $108.9 million mark-to-market loss related to the cashless exercise of a 2024 warrant as part of its pre-IPO capital structure. Stripping out this one-time non-cash item, the operating loss of roughly $66 million is a more representative picture of underlying cash economics. Cash flow. Net cash used in operating activities was $67.3 million, up 61% year over year, reflecting higher ARDP program activity, corporate headcount growth, and increased enterprise software and contractor spending. Net cash used in investing activities was $166.0 million, primarily reflecting $189.9 million was purchases of investment securities and $43 million of capital expenditures, partially offset by $28.8 million of ARDP construction reimbursements. Guidance. As a newly public company reporting its first quarter, X Energy has not yet established a formal quarterly or annual financial guidance framework. Management commentary instead centered on operational and regulatory milestones. Management commentary. CEO Clay Sell characterized the quarter as marking an important moment for X Energy, emphasizing progress commercializing the company's advanced nuclear technology at scale. Management highlighted that the construction permit application for the Dow Seadrift project is anticipated to be approved by Q1 2027, ahead of some earlier internal expectations, and that TX-1 fuel facility construction remains on schedule for completion in the first half of 2028. Executives described the company as well capitalized to support strategic objectives and growth initiatives following the IPO close. Key changes versus previous quarter. First quarter reported as a public company following the April 2026 IPO close. Revenue and grant income growth accelerated to plus 109% year over year. Operating expenses and cash burn both increased at a faster rate than revenue, widening the operating loss. Received two first-of-their-kind NRC licensing milestones, the Category 2 fuel cycle license and the Part 70 commercial fuel fabrication license, and a favorable NRC environmental assessment for the Dow project. Balance sheet strengthened materially post-quarter end with the close of the IPO, roughly doubling pro forma liquidity to approximately $2.05 billion. Section 12. Growth drivers. Catalyst 1. AI-driven electricity demand. Hyperscale AI data centers require enormous continuous power, and Amazon's own 5+ gigawatt XE100 commitment is direct evidence that at least one major cloud provider views advanced nuclear as part of its long-term power strategy. Catalyst 2. Federal policy tailwinds. DOE cost-share funding through the ARDP program, combined with streamlined licensing legislation such as the ADVANCE Act, materially reduces X-Energy's own capital burden on early demonstration projects and shortens the theoretical regulatory timeline. Catalyst 3. TRISO-X as a merchant fuel platform. If TRISO-X can sell HALEU fuel to reactor developers beyond X-Energy's own XE100 program, it could become a diversified, less contract-concentrated revenue stream tied to the growth of the entire advanced nuclear industry, not just X-Energy's own reactor sales. Catalyst 4. Expanding customer and geographic pipeline. New 2026 relationships with LG&E and KU in Kentucky and Talon Energy in the PJM market, alongside the UK Generic Design Assessment application, show the backlog is still expanding beyond the original Dow and Amazon anchor deals. Catalyst 5. Strong debt-free balance sheet. With roughly $2.05 billion of pro forma liquidity and no debt outstanding, X-Energy has meaningfully more runway than most pre-commercial industrial technology companies at a similar stage, reducing near-term financing risk. Section 13. Key risks. Risk 1. Pre-commercial, pre-revenue core business. X-Energy has not completed construction or commercial operation of a single XE100 reactor. Nearly all current revenue depends on government cost-share funding and services fees rather than product sales, and this dynamic is unlikely to change for several years. Risk 2. Accelerating cash burn. Operating expenses grew 133% year-over-year in Q1 2026, materially outpacing 109% revenue growth. At a run rate of roughly $67 million or more of quarterly operating cash use, sustained spending growth could require future capital raises well before the company reaches commercial revenue, even with a strong post-IPO cash position. Risk 3. September 1, 2026 lockup expiration. A large tranche of pre-IPO shares becomes freely tradable on this date. Sell-side analysts have flagged this as a specific near-term technical risk, likely to pressure the share price as insiders and early investors become able to sell. Risk 4. First-of-a-kind construction and regulatory execution risk. Nuclear construction projects have a long history of cost overruns and schedule delays industry-wide. For example, the Vogtle plant in Georgia. Even with favorable early regulatory signals, the Dow Seadrift project's construction permit is not expected until Q1 2027 at the earliest, and actual construction and operation dates remain further out. A meaningful share of X-Energy's current backlog and near-term revenue visibility is concentrated in a small number of relationships, Dow, Amazon, and Centrica, with several newer relationships still at the letter of intent or exploratory stage, rather than binding, fully financed contracts. Risk 6. Intense well-funded competition. Oklo, NuScale, TerraPower, and Kairos Power are all pursuing overlapping hyperscaler and utility customers with differing reactor technologies. Several have also attracted strong strategic partnerships, and industry-wide, no single company has yet proven a clear technological or commercial winner. Risk 7. Non-cash earnings volatility. As seen in Q1 2026, warrant and other capital structure-related mark-to-market adjustments can cause large swings in reported net income that are unrelated to underlying operating performance, potentially confusing investors evaluating quarter-to-quarter headline results. Risk 8. Key person and governance considerations. Founder and executive chairman Cam Ghaffarian is simultaneously involved in leadership roles at multiple other companies, Axiom Space, Intuitive Machines, and Quantum Space, which investors may wish to factor into their assessment of strategic bandwidth and board oversight. Risk 9. Limited public company track record. With only 1 quarter of results reported publicly, investors have very little historical data to evaluate management's ability to consistently hit operational and financial targets as a public company. Section 14. Valuation. Valuing X-Energy with traditional metrics such as price to earnings is not meaningful, since the company is not profitable and does not expect to be for several years. Instead, investors and analysts typically frame X-Energy's valuation around its price relative to its disclosed order backlog and comparisons to similarly pre-commercial SMR peers. Key metrics as of July 17, 2026. Share price, approximately $14.02. Shares outstanding, approximately 406 million. Market capitalization, approximately 4.0 billion. IPO price, $23.00. Current price is approximately 39% below IPO level. Post-IPO high in May 2026, approximately $37. Disclosed order backlog, approximately 11.5 gigawatts, approximately 144 reactor units. Sell-side views. Coverage has been mixed but skews constructive. JP Morgan initiated coverage with an overweight buy rating and a $38 price target, calling X Energy a front-runner in the SMR race based on its backlog and customer roster. Jefferies, by contrast, initiated at hold with a $28 price target, arguing that after the stock's initial post-IPO rally, risk and reward looked roughly balanced. Independent analysis has rated the stock hold at current levels, citing the strong balance sheet and TRISO-X franchise against the looming lockup expiration and pre-commercial revenue mix, suggesting a $16 to $18 entry point would offer a better risk-reward setup. Given the wide dispersion in analyst price targets, $28 to $38, and the absence of a profitable operating history, readers should treat any specific valuation framework for XE as inherently uncertain and dependent on assumptions about multi-year execution that have not yet been tested. Section 15. Upcoming catalysts. Next quarterly earnings. Q2 2026. Expected August 2026. First opportunity to assess whether the accelerating cash burn trend from Q1 2026 continued or moderated. Lockup expiration. September 1, 2026. Large tranche of pre-IPO shares becomes tradable, flagged by analysts as a likely near-term overhang on the stock. Dow Seadrift construction permit decision, targeted Q1 2027, a key regulatory de-risking event for the company's most advanced commercial project. Additional definitive agreements, ongoing. Conversion of the Talon in PJM and LG&E and KU in Kentucky exploratory relationships into binding agreements would expand and de-risk the backlog. UK generic design assessment progress, multi-year, ongoing. Regulatory approval in the UK would open a second major geographic market for the XE100. TX1 fuel facility construction milestones through the first half of 2028. Progress updates on TRISO-X's core manufacturing facility, central to the fuel business growth story. Additional supply chain agreements, ongoing. Further deals in the vein of the SGL Carbon Graphite Agreement or IHI Corporation MOU would reduce execution risk in the XE100 supply chain. Section 16. Long-term outlook. Over a 5 to 10-year horizon, X Energy's outlook is best understood as binary in nature, rather than a smooth growth curve. If the company successfully obtains its construction permit for the Dow project on schedule, targeted Q1 2027, completes construction without major overruns, and TRISO-X's fuel facilities come online as planned by the first half of 2028, X Energy would become one of the first companies in the world to operate a commercial advanced small modular reactor, a milestone that could unlock the broader 11.5 gigawatt backlog and attract substantial additional customer commitments. If instead the company encounters the kind of licensing delays, cost overruns, or technical setbacks that have historically affected nuclear construction projects, the timeline can stretch meaningfully, requiring additional capital raises and testing investor patience. The broader industry backdrop, sustained AI-driven electricity demand growth, and continued federal policy support for nuclear power, provides a long runway of potential demand, regardless of which individual company or companies ultimately succeed. X Energy's structural advantage, if it holds, is likely to come less from the Z100 reactor design in isolation, and more from the combination of an early regulatory lead, a large and expanding customer pipeline, and a proprietary fuel business, TRISO-X, that could generate value even in scenarios where a portion of the reactor backlog does not convert to completed projects. Section 17. Bull case. X Energy converts its regulatory lead into the first operating commercial Z100 units in the U.S. SMR sector. The Dow construction permit is granted on schedule in Q1 2027, and construction proceeds without major overruns. TRISO-X becomes a recognized merchant HALEU fuel supplier beyond X Energy's own reactors, generating diversified recurring revenue. The LG&E and KU and Talon relationships convert into binding large-scale agreements, The UK generic design assessment process succeeds, opening a second major market, and AI-driven electricity demand continues to expand the addressable customer base faster than competitors can capture it. In this scenario, X-Energy's approximately $2 billion cash position provides ample runway to reach commercial operation without dilutive emergency financing, and the stock re-rates meaningfully above both its IPO price and its post-IPO high as the company de-risks from story stock to genuine commercial nuclear operator. Bear case. Nuclear construction's historical pattern of delays and cost overruns repeats itself at Dow Seadrift or subsequent projects, pushing the construction permit and eventual commercial operation dates out by years rather than months. Operating expenses continue growing faster than revenue, forcing a dilutive follow-on capital raise well before commercial revenue materializes. The September 1, 2026 lockup expiration triggers sustained selling pressure as pre-IPO holders realize gains or cut losses. Competitors, particularly Oklo with its NVIDIA and Meta relationships, capture a disproportionate share of new hyperscaler nuclear deals, and exploratory relationships with Talon and LG&E and KU fail to convert into binding agreements. In this scenario, X-Energy remains a pre-revenue story stock for longer than the market currently expects, and the shares continue trading well below both their IPO price and post-IPO high, as investor patience for capital-intensive multi-year nuclear development narratives wears thin. Section 19. Final Investment Conclusion. X-Energy's April 2026 IPO and subsequent Q1 2026 earnings report tell a consistent story. This is a well-capitalized, well-connected, first-mover company in a genuinely important emerging industry, but one that remains years away from proving its core commercial thesis. The 11.5 gigawatt backlog, Amazon and Dow relationships, and TrisoX's early NRC licensing wins are real, verifiable achievements that differentiate X-Energy from many earlier-stage nuclear startups. At the same time, the 133% year-over-year growth in operating expenses, the widening operating loss, and the looming September 2026 lockup expiration are concrete near-term reasons for caution that go beyond generic nuclear is risky commentary. For investors, the central question is less, does advanced nuclear have a future? The policy and demand backdrop increasingly suggests it does, and more, will X-Energy specifically be one of the companies that survives the multi-year gap between backlog announcements and actual commercial operation without requiring dilutive financing along the way? The company's roughly $2 billion of pro forma liquidity provides meaningful runway to attempt to answer that question, but it does not eliminate execution risk. Bottom line, X-Energy is best understood as a high-risk, high-potential reward position within the broader AI-powered demand investment theme, suitable primarily for investors with a multi-year time horizon and tolerance for pre-commercial industrial technology risk. This report does not constitute a recommendation to buy, sell, or hold XE shares. Readers should review the complete Form S-1A and 10-Q filings on SEC EDGAR and consult a qualified financial advisor before making any investment decision.